So I am going to be covering just two main things in the next 10 minutes. How to identify traps and how to capitalize on them. It's very, very simple. If you know this strategy, your trading will be way, way ahead of your peers. I'm going to talk about one of the most powerful, important, and straightforward strategy that you can use in your trading on a day-to-day basis. And that is traps. How do you use traps to achieve results like this and this on a daily basis? So without further ado, let's get started. Hold on, you know the drill. Before we get started, make sure to scroll down, hit the like button, subscribe if you haven't already, turn on the notification bell, leave a comment section below letting us know what do you want to see next. And let's get started. Right here, what we have is the dollar CAD pair on the 60-minute time frame. And I want to draw your attention to this area right here. Now, this area right here is what we call an area where traders are trapped. And if I really extract that area out to the right-hand side, you can see we actually have a pip perfect reaction of that area, which resulted in a move towards the upside. Okay, we did not have any drawdown, we touched that area and go. Typically, if you are able to identify traps like that, you will see strong reaction like this. However, we all know the benefit of hindsight. Just trying to eyeball traps like this in the historical market is super simple, because if I really draw your attention to this area right here, this technically is also a trap. And why did that trap not work? To really answer that, I need to first get you to understand the logic behind what a trap is. So in order to do that, let's use the whiteboard right here. Okay, first of all, for a trap to happen, we need to make sure that everyone in the market, they're all thinking along the same lines, in the same direction. So for example, if we have an uptrend that looks like this, majority of the players in the market, they're going to be thinking, okay, this is an uptrend, and the classical knowledge dictates that, if we get a pullback into support equals resistance, that's where we want to buy. Simple as that, right? If we pull back into this area, that's where traders are going to buy. However, we only get that sentiment once we know it's an established uptrend. Meaning, we only know that once we see clear higher highs and higher lows. If I were to draw this move right here, this area, the amount of traders out there thinking that that's a buy versus the amount of traders out there that's thinking this is a buy, position A will have a lot more buyers than position B, simply because position A is more obvious. The key thing here to take note of is the more obvious the trend, the more traders are going to get on board. So coming back to position A, if we have another move towards the upside, which then collapsed down like that, any traders, and in this case, a lot of traders doing the buy at this spot right here, position A, they're going to be trapped. Their position is going to go from green, from here, and then going into red as price comes down. Once they are trapped, the logical thing for them to do is getting out as price comes back into the same area, which means as price comes back up into this area where they once were buying before, they're gonna get rid of their position. Any buy orders that they took at position A, they're gonna start selling. And if enough traders are all thinking along the same lines, selling off their position at this same spot right here, that's going to cause a move going towards the downside. This right here, at Urban Forex, we call this a release. Okay, basically any trap traders right around here, they are releasing their sell orders on this particular move. This logic would only apply if we are in a clear trending market. If we're not in a clear trending market, this logic is not going to apply. That's the main rule to remember. There is generally two types of traps you will see in the market. This is what we call trap A. Now trap B looks something like this. Same kind of situation where we have a clear established uptrend. Again, in a clear established uptrend, people are going to be looking for a buy at support equals resistance. Now, it doesn't matter how they're going to be buying. All we need to know is this becomes a strong level as price comes down. People may get in on the buy using limit orders, stop orders, or market orders. We do not really need to figure that out. All we need to know is that area is important for buyers to be buying. However, there will be cases in the market where the selling pressure is way stronger than any buying pressure, where there is no move towards the upside at all and price just continues to drop. What you want to do here is visualize and imagine that anyone who was buying there, although we are unable to see the candlesticks moving towards the upside like trap A, you need to visualize that buyers are trapped in those areas. But because the selling pressure is just so strong, it just pierced through the SNR like that. Now you have to start thinking, anyone who has actually bought here, what happened to their position? In the same way as trap A, trap B's traders' buy positions are also now trapped. So what's gonna happen in this case is we're gonna pull back into the SNR, and that's again where the release is going to happen, like so. And in this case, this would just look like your typical head and shoulder pattern, with your left shoulder here, right shoulder here, and that's where the head is. Simple, right? You just need to make sure that you follow the rule that in order for a trap to form, it needs to be in a trending market. Then the second thing you need to do is visualize where are the obvious areas to buy and how are those areas responding. If they get breached and devoured on a retest, that's where the release of those traps are going to be. So clearly, you understand how important multi-time frame analysis is. And speaking of which, I'm actually hosting a webinar around this coming Wednesday, 24th of September, 8 a.m. New York City time. This is gonna be a private webinar, so make sure to cop a seat below in the link in the description. I'll see you there. Cheers. Now back to the video. So if we move back to the previous example that we were just looking at here on the dollar CAD example, you would argue that, hold on, this is also a trend, right? Why does this not work so well as opposed to this one right here? Of course, we have some type of reaction there, but that's not doing much, is it? The key here is to understand the bigger context. If I zoom out just a little bit further, like this, you would really see that the main player is for the sell side. Sellers are really dominating the market here, which means any pullback that we're getting, people are going to be selling. So if we really track further with this example, we can clearly see that we have another lower high followed by a lower low, and on a pullback, this is the area where sellers are trying to sell. And look at the way that they're selling. They're selling once, twice, 3 times, 4 times, 5 times, and then the entire thing got devoured to the upper side. This is your trap A, okay? We can clearly see where the sellers are selling. Once you have that, all you need to do is mark out a zone like this. Once you have marked out the zone, extract that out towards the right side on a retest. That's where you want to pay close attention to any potential reaction, okay? We'll talk about the precise entry in a bit, but before that, have a look at this area here. If you really think about it, majority of the traders in this market, they're trying to sell. So hopefully that answers your question to why this trap did not really work. Because majority of the traders here, they're looking for a sell. And majority of the trap traders, they're trapped on the sell side. Which means when they release, this is going to be far stronger than this short-term uptrend attracting short-term buyers. Because the long-term sellers here, they're selling with way more conviction, which also means they're selling with a lot more money, which also means a lot more money is trapped right here, which also means when the release happens for the buy side, the buying pressure is gonna be very strong. And that strong buying pressure is going to destroy any small traps in its way. Okay, so let's move on to the part where you want to scroll down. Make sure you like this video if you haven't already, and subscribe if you haven't yet already. Okay, but seriously, let's have a look at another example here on Bitcoin. Here I have this example pulled up where it's a picture perfect trap. Now again, a very similar story. We have a clear established downtrend. Any pullback traders are looking to sell. we have a push down, a pullback looking for a sell, push down, a lower low, and on the lower high, traders are once more looking for a sell. Now, in situations like this, once we have a move up, that's generally telling you anyone who was selling, they are now trapped. And if you really see what happened next, at this trap area, on the flip side, when the release actually happened right around here, here, and here, the move towards the upside is very strong, and it can sustain for a very long time. And here's another example for trap buyers. If we look at Aussie USD on the 15-minute time frame, we see an established uptrend. Okay, now this established uptrend has been going on for a while, and on this final move towards the upside, we get to see a trap B forming. Now this is a clear support and resistance area where it's a logical spot where buyers are going to buy at this precise area right here. Now you see price just crash down through it very quickly, very easily. Once that happened, you want to pay really close attention to this area as it pulls back, because look at how price just touched that area and then drops dramatically. That's where and how you want to capitalize on traps, because if you identify them correctly, they can really make you a lot of profits really quickly. So now that you understand how to actually identify traps, let's talk about how you want to capitalize on them. There's two main ways. The first way is, as price comes into the trap area, you want to hit the sells right around here with your stop loss above this area. Then what you want to do is take your profit at the recent low right around here. For this particular trade, it will net a 1R profit with a very quick touch and go reaction. But you don't necessarily need to have a stop loss as wide as this, because if you are able to identify those traps correctly, you can tighten your stops a lot more. I'm going to show you how. What you want to do is go down to the lower time frame and isolate that area. So we have this area marked out. We're going to go down to the 5-minute time frame. On the 5-minute time frame, we know this is where the reaction is going to be. All you need to do now is do the exact same thing on the 5-minute time frame. So on the 5-minute time frame, we are able to see a very clear move towards the upside. So you do not want to take these areas into account because we are not yet at the trap area. But as we make another move towards the upside in this small little uptrend, we are able to see an SNR forming. And that's again an area where you want to assume that buyers are looking for the buy there. Now, did the buy actually perform? It did not perform. Price sliced through it just like that. Once that has happened, as price comes back up, that's where one more time the release is going to happen. So if I really put this into perspective, what you're actually doing is you're selling a trap right around here based on this SNR right there, and you're selling this trap after a reaction of a bigger trap on the higher time frame. So that's trap within the trap, if that makes sense. So this is the higher time frame trap. We responded off that area, we pulled back right into it, and if you executed the trade correctly, it will look something like this. You're turning a 1R trade previously into easily a 1.6R profit. Easily making 50% more on your profit target, getting in a little bit later prior to the launch happening. And look at what do we have here, a classical head and shoulder pattern. So we can actually do the exact same thing on the Bitcoin chart that we were looking at. So if we go back to Bitcoin right here, you can do a few things. You can actually get in right around areas like this on the higher time frame, look at the trap, and then hold it long term based on your analysis, based on your strategy, based on all that kind of stuff. But if you want to chunk it, getting in and out quick, this is the way to do it. So one more time, we have identified where the trap is. If I remove this zone and I get a little bit more precise with this, this is the area where we know sellers were selling, and when this price reached above, anyone who was selling, they're going to try to release their sell position as price comes back down in this area right here. So let's go down to the lower time frame right around here And let's look at how the release actually happened on the lower time frame. So I'm on the 60-minute time frame here, so let's drop down to the 15-minute time frame. So on this lower time frame, it's very simple. All you need to do is, again, focusing on the higher time frame trap that we identified, which is this area right here, and then just watching the lower time frame and see how the short-term downtrend is coming in. Now we see a lower low, lower high sequence, and this next lower high sits around areas like this. What we need to do is see a clear trap forming and then taking a retest of that trap and release towards the upper side. Okay, it's actually as simple as that. So if we play this forward, we see another reaction from the sell side, and there we have sellers are now trapped. Once sellers are trapped, identify where the last trap area is. In this case, it will be right around here. Now what you want to do is getting in as soon as we retest that area. If we reach that area, that's where you want to be getting in for the release. Okay, so if you play this forward, we see a reaction pip perfect into that area and then reaching target just like that. This trade alone would net you a 1.7R profit. A very quick in and out trade, very high probability trade, just like that, using a trap on the lower time frame right around here for a release on top of a release on the higher time frame, like that. So what you can see here is I'm actually using a lot of confluence when it comes to trading traps. I'm not just spotting a pattern in the market. I'm using the higher time frame context to identify the bigger traps. And then as price is coming back down for a release, I'm going down one time frame lower just to finesse the area to get in to chunk the market. Of course, you do not need to do it exactly like this. You can always go back to the 60-minute time frame. What you can also do is just getting in right around here with your stops below and taking it up to the next level like that, right? If you were to do that, that's also a possibility for the trade to perform very well. We do see price hanging around this area for a little bit, but what you can really see is we do not really go below. Price hangs around this area and it's still releasing at that area. And if we really track forward, we can really see price going to that area very quickly. And in this case, it would be a 2.77R profit. So there you have it. Traps do not need to be overcomplicated. It's actually very simple if you understand the logic behind it and if you understand how to properly apply it in the safest possible way. Notice, I'm not actually going for 3R, 5R, 10R. I'm going for 1.6, 2R trades just because I know that those are the highest probability trade. If I'm able to get high probability return, I do not mind taking those 1.6R, 1.7R over and over again because that, in the long run, is gonna make a lot of profit. So I hope you enjoyed this video. If you haven't already, make sure to like this video and subscribe to this channel because that's really gonna help support the channel. Leave a comment in the comment section below on how you actually use trap and if you found this useful, and I'll see you on the next one. Cheers, bye for now.